Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Since the Reserve Bank of Australia rate decision on Tuesday, the Australian dollar has struggled to stage any significant upside moves and therefore has slumped to a fresh 10.5-year low of 66.70 overnight, with a negative direction in the RSI and also in the MACD backs this view as well. It is assessed that the market is still, though, a little bit uncertain to the downside challenge, because over 5 attempts we've seen rejections from this 10.5-year low, which is at 66.80. And also the fact is, from the rejection, is slightly bullish because we're seeing a little bit of divergence here when it comes to the bullish case. Now, a break above 67.55 would give a squeeze up to 68 cents, which I still view as a potential sell zone and look towards the downside eventually. Now, a break under 66.80 and a close there from New York would give me a target of 65.5 cents. The euro, since rebounding in front of the level of 108.65, has found a bit more momentum, that is, and looks up towards the level now seen around 110.20.30. It is ascertained from there the market will fail because this downtrend has worked significantly well for the bears and kept the initial focus on the support. So I'm not viewing any real threat to the upside at the moment. If the market can reject that level, then I'm looking at 108.65 and reassess from there. Since the rejection of 108.30.60, dollar yen has focused furthermore on the downside and is now only a handful of points away from 106.70. I do anticipate this level to be challenged. If broken, looks towards a target of 106.10 and reassess from there. Any advances should likely fail. We've got two long-legged dojis in front of this level of 121.70. A little bit of uncertainty in terms of taking the challenge lower, but the technicals are still bearish. Only a break above 124, figure 25, would give further indication to the upside and maybe see a move beyond there to 125. But although the technicals are a little bit on the bearish case, the indecisiveness can still throw the bears aside and maybe see the ball step in. But we need further confirmation to give this call. While the market is broken back above the upside, with the uncertainty due to the fact is that more traders are now returning back to safe haven demand as the US economy is slowly deteriorating. With figures out over the night and on Tuesday that are giving indication that the US economy is struggling somewhat, we now look towards the non-farm payrolls this Friday to see how healthy the US economy is. If so, we do get a figure around which is expected of 140,000. Could see a little bit more of an impulse to the upside, but the break above 1,494 overnight has negated this head and shoulder pattern. So I'm holding the view now to maybe up to 1,512. If we go beneath 1,488, I'm neutral and I'd rather sit out for the moment. There's only one thing sticking out that's very strong, is these 2 points here to these 2 points on the MACD. Bullish divergence, therefore could see further rise. And finishing up with oil, well, the market has reached its objective of $52 a barrel. And now, time to reassess where we go next. The trend is still down though, with the ADX still strong. But we are oversold and therefore could see a short-term correction. And do note, we did get a rejection down at this level. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report and hope you enjoy the great start to the new day.